Banks have been cutting mortgage rates after the Reserve Bank reduced its key interest rate today for the first time in more than 2 years. The central bank cut its official cash rate to a new record low of 1.5% amid growing economic risk. It's good news for borrowers, but those with savings in the bank have less to smile about. Kim Savage has more on what it means.
The official cash rate is just one of the tools the Reserve Bank has up its sleeve to tinker with the economy. It's aimed to keep what consumers pay for goods on track and to maintain employment at its maximum level. Concerned we're off course a bit because of a slowdown in domestic and global growth, the Reserve Bank's cut its benchmark interest rate in the hope it'll free up a little money for the economy. The central bank's governor, Adrian Orr, acknowledges the flow-on effects of the cut.
So I think there's always two sides to an interest rate. There's the savers and the borrowers, and yes, it's lower than otherwise interest rates, and they may need to be thinking about what things other than just deposits in a bank they could be doing with their capital.
Today's decision from the Reserve Bank was the most closely watched in 2 years. Economists were split on whether the central bank would cut the rate or not. Kiwi Bank Chief Economist Jared Kerr says the winners are those who have debt.
But the losers, unfortunately, are the savers, and a lot of them are retirees. So they'll receive less income off what's already low interest rates. So that's a concern for a proportion of our society.
It's also the first decision by the bank's new 7-member committee. Previously, it was down to the governor and his colleagues to make the call. Mr Orr says members of the group were concerned that a cut could heat up the housing market, but that wasn't enough to put them off.
We do expect to see the impulse from lower interest rates to come through spending and through investment activity, and part of that would be housing activity.
The Reserve Bank signalled a lower track for the official cash rate, but the chief executive of Squirrel Mortgage Brokers, John Bolton, doesn't expect banks to move much further.
I think you're going to see a bigger disconnect between the OCR and mortgage rates if it falls further, because the reality is that banks can't drop their deposit rates too much more. You'd be lucky if you got 0.5% on a savings account these days, and term deposit rates are okay, but they're certainly getting pretty low now, aren't they?
And some economists are now picking there'll be a further official cash rate cut as early as August. For Checkpoint, this is Kim Savage.